All right, buddy. So welcome to Resilience, our fourth in a series of post-COVID-19 resilience. We're really lucky today to have Alex Lazarow, the venture capitalist and author of a brand new book. So new, it's not even in the Amazon distribution yet. So Alex's new book, Out-Innovate, How Global Entrepreneurs from Delhi to Detroit Are Rewriting the Rules of Silicon Valley. It really resonated with us. Super excited to have Alex with us today. So Alex, thanks for joining.
Thank you so much for having me. I just got my first author copy right here. So it
awesome.
is real now.
So first off, I just wanted to kick off with a simple question. Like, why did you decide to write the book now, and what was animating you to take that on? It's a big project.
Yeah, absolutely. Well, so by day, I'm a venture capitalist. I work for a globally focused venture firm, Cathay Innovation, which invests across Asia, Europe, North America, and Africa. And outside of work, I teach entrepreneurship at the Middlebury Institute for International Studies, which is the graduate program at Middlebury College. And many of my students were, like me from I grew up in Winnipeg in the middle of Canada, moving back home to wherever they're from, or moving to emerging markets to build.
The world needs more Canada, baby. We have that in common.
Yeah, exactly. And as they were looking to build their startups, there's a year-long class. At the beginning, they come with a concept. At the end, they would pitch venture capitalists. Watch out, Chris, I'll rope you in to be a judge soon for the next one.
Happy to do it.
I was getting really frustrated that I kept assigning my students books on entrepreneurship, and it'd be like things like Reid Hoffman and Chris Yea's Blitzscaling, or Ben Horowitz is The Hard Thing About Hard Things, or what have you, which are excellent books. But I always felt like I had to contextualize them to the reality of building startups in more emerging ecosystems. And I think that the best entrepreneurs operating in Detroit or Toronto or Winnipeg or Amsterdam, Bangalore, Nairobi have more in common with the best entrepreneurs in Sao Paulo than they do with those in San Francisco. And yet no one was telling their stories. And so I wanted to give voice to that story. And that was the genesis of the book.
One of the things I loved that you wrote about, one of my favorite quotes was, camels are not imaginary creatures like unicorns living in fictitious lands. They're resilient and they can survive in the harshest places on earth. What did you mean when you talked about these kind of startups and founders in that context?
So I think that Silicon Valley has taught us everything we know about startup best practice, everything we think we know. And one model around that is this notion and philosophy on how to build companies. And we use the term unicorn, and it's not just $1 billion company, but it's also a philosophy on how to build startups. And if the philosophy is the unicorn, the method is growth, and growth at all costs. It often comes with subsidizing acquisition in spirit of growth. It often comes with spending a lot of money in service of growth. And I think this alternate model, which is what I call the camel, is really a powerful approach. And unlike the unicorn, as you said, real animal that can survive, it obviously is still focused on growth. And it obviously still is building our businesses that have the network effects that are enviable. But they do it from a position of infusing the business model with sustainability and resiliency from the get-go. And so there's a couple ways to do that. I think one is charging for the value that you create. So offering a product, charging for the value, having a really deep focus on unit economics. And two, being really thoughtful about burn and managing the burn. I read this amazing statistic a couple months ago where there were more employees working at money-losing companies since even before 2001, right? Like the rate of burn is so large. And that's kind of the opposite approach. And the third is taking a long-term approach. And so that's what I meant by building a camel. And I think it's an approach that was developed out of constraint, but actually is very strong and gives us a model that works in any condition.
And obviously with the market economy globally changing as fast as it has because of COVID and the oil shock, camels certainly are looking like much more attractive animals to have in your stable than unicorns. But curious your thoughts on, as you know, at BreakawayGrowth, we're very focused on capital efficient growth. And one of the big tenets that we believe in is bringing the expertise and the knowledge of the Valley and cross-pollinating that into these other centers. But can you talk a little bit about sort of the relative scarcity of capital that these companies have, and then sort of, what the benefit and the issues are of that?
Yeah. And, it's important, like the context is really what's crucial. In the Valley, we exist in an ecosystem where there's 1,000 venture firms, where the dollars per capita is almost $2,000 venture capital per person. which is, 4 or 5x more than in Chicago, which is around, $400, $500. Austin, similar kind of level. All of Latin America has less than 100 venture capital firms, right? So putting in the context is so important. One of the companies that I know you and I both know well, and it's close to our heart, is company Grubhub. I interviewed Mike Evans, who's one of the co-founders.
Mike's awesome.
And what's amazing about that business is I often kind of think of venture subsidized models, and my mind jumps to things like on-demand delivery or things like that. But actually, Grubhub was built in a context where they raised a paltry $80 million of venture, a little bit of mezz later on, and then did an IPO or a multi-billion-dollar company. Put that in comparison of something like DoorDash, which has raised $1.5 billion.
And still doesn't have positive unit economics, right?
And what's interesting is, Mike talks about how at every single fundraise, they were sustainable, and they raised venture capital money for very specific purposes. So be it to expand to another city or be it to do a small acquisition, but it was really measured around that and centered around a focus on unit economics. And also, Mike talks a lot about this idea, and this touches on the resiliency point. He was able to do the same thing at lower risk by taking a long-term view. So, it took him 8-9 years to IPO. He told me, look, I could have done it in 2 years, shorter time, but that would have done it at measurably more risk. So his risk-adjusted outcome was better by doing it with this camel-like approach. And so I think this is the mental shift I think is important to think about, and one of the things I'm pretty passionate about.
Yeah, I was fortunate to be an investor in Grubhub, as you know, a previous firm. And one of the things that Mike was really dogmatic about from day one was cash flow, and really understanding the unit economics of the business. And once he felt like he was ready, then he would scale. I think he only raised under $2 million in the Series A, and just built a playbook and then methodically scaled it when he really understood the business.
Yeah. And what's interesting is that approach actually yields some really interesting results. There's an analysis done on returns in Chicago. And what they found was venture returns among successful exits were meaningfully more successful. So 45% of successful exits, the MOIC, so the multiple on invested capital was 10x. Compare that to 25% in the Valley. And so it's actually, by taking less capital, they actually could get better outsized returns. Paradoxically, by the way, it's only now when competing against companies like DoorDashers of the world, et cetera, that Grubhub's actually had to change their model a little bit and really, really fight. And so it's kind of in this different context. The other company, by the way, which I know you know well too, Chris, is Qualtrics, which
Ryan's company, fantastic business up in Salt Lake City.
Yeah, and one of the things that I think is unique about that story is, obviously I'm a venture capitalist, you're a VC. Like I think a VC is an incredible tool. It's just not an incredible tool in every situation or at every point in a company. And Ryan, when I interviewed him, who's Ryan Smith, who's the co-founder of the business, he talked a lot about how his big breakthrough wasn't in the first few years, actually at year 12, 13, when they pivoted to enterprise, and was actually having a business model that was sustainable through a while for them to continue iterating and building a foundation. And then they really unlocked value. They raised capital eventually. Most of that was for secondaries when they had already built a multi-billion-dollar business.
Another example is like Atlassian and MailChimp and Basecamp, I think 20 years in the making of success. So, these kind of companies that really focus on understanding their business, understanding their basic unit economics, servicing a need, making that product market fit foundation really strong. I think increasingly we're seeing these companies come exactly where you're talking about from the frontier, and they're built stronger. And in a lot of cases, they don't even need venture capital. They maybe need connectivity to talent. That seems to be the big challenge. Yeah. But capital doesn't seem to be the challenge for these companies. Is that what you're seeing as well?
I think it's about, I think if you build a fabulous business, there will be capital, but it's about thinking thoughtfully about how much capital you need. If you think of the valley of death, every startup loses money for a period of time in service of growing revenues. And the question is whether or not you want to deepen that trough deeper than it already is in service of accelerating the revenue line. And what I see is that a lot of companies are taking the opposite approach when they're taking a camel-like philosophy and managing the cost line, still growing really nicely, but doing it in a way that they're able to build resiliency and sustainability in their business model. It doesn't mean they have to be profitable the whole way through at any point. It means that they can get to that and they have the ability to control those levers. And that's what I'm seeing a lot of.
One of the things that's really interesting for us, Breakaway Growth, is that because we focus on only capital efficient growth companies, and if these companies are at a disadvantage to capital, in the frontier, they have to build a company stronger with customer dollars, with market fit. And that's, we think about these companies as crocodiles. They've been around for 1 million years. They understand the trade-off between growth and risk to allow resilience. And resilience, as you know, is a big theme for us. But curious your thoughts on whether or not you're seeing this happen at an accelerated basis, in part because of things like cloud and open source that these companies, we're seeing more of them. I'm just wondering if your data is showing that as well.
I love the crocodile analogy. One more animal in our menagerie. I just got camel. There's a guy that has a blog of the zoo of startups, and they coined camel in it. So we'll have to get crocodile in there as well. So I think it's such an interesting question. I think the data on it is still emerging on this happening. I think there's a couple accelerants that are very germane to the time we're now, right? I wrote the book 2 years ago, perhaps in the heyday of growth at all costs. And the context seems to have shifted a lot in the Valley where, in the fall we had,
I loved your quote of SoftBank chasing a stable of unicorns. I don't think that's happening anymore.
And things have shifted, right? And now, as we're recording this, we're in quarantine during Corona. And all of a sudden, the world has shifted and towards this idea of, look, we just need to hunker down, have sustainability, manage costs. People are doing layoffs, all this stuff. And I actually think the Valley doesn't have an awesome playbook because the Valley, has been extraordinarily good at building fabulous companies in a context of abundance. But in a context of constraints, I actually think now we have an opportunity to learn from many of the companies that you and I have thought a lot about in North America and beyond. And so totally resonate with that point.
One of the things that when we started the C100, which is the Canadian diaspora, one of the challenges that Canada had was really simplified into 3 things: access to capital, which has largely been solved, and I think increasingly on a global basis, to your point; access to information and the underlying infrastructure you needed to build these companies, which I think the world is flattening on that front too. But the third one you talk a lot about in the book that I'm interested to unpack a little bit more is on talent.
Yeah.
And just access to talent, that does seem to be the biggest issue for companies on the frontier.
Yeah. And I believe that talent is distributed evenly, but opportunity is not. And one of the challenges that entrepreneurs operating in ecosystems like in Ottawa or in Winnipeg or wherever is that there isn't the same depth of trained startup human capital. There isn't this whole army that the Valley has, these been there, done that employees that you can tap in at different points of growth. And so as a consequence, entrepreneurs I've seen do some really interesting experiments, in some cases, some really interesting emerging best practice on how to solve some of that. And so 3 examples I think are really germane for this. One is around building the talent pipeline. Shopify, a company I know we both spent a bunch of time in Ottawa and that well, Chris. One of the things I think that what they're doing, they're no longer a startup, right? They're a pretty established company, but Jean-Michel Lemieux, the CTO, did a partnership with Carleton University, a local university, to create a dev degree as a way to create pipeline. He was tapping out the local
talent. Yeah.
And so he's like, I'm going to build my own. And so he has a fully funded engineering degree with Carleton University where students co-op throughout the degree with Shopify. And when they graduate, they come. The students win. They have a subsidized degree and they get to work with a world-class company. Shopify wins because they have developed a pipeline of talent that actually knows the company really well and can onboard very quickly. And the ecosystem wins because there's this flourishing of talent. And so I think we'll see more of that. They already are actually on their way to do a second second one of these in the Toronto area.
I remember talking to Toby and Harley when they're starting the business, in the market in downtown Ottawa, and they had a lot of venture capital interest from the U.S., but all of them seemed to kind of come with the condition that they move the business.
Yeah.
I give the guys a lot of credit to sticking to the type of company and culture they wanted to build and rooting the company really deeply in Ottawa, even when some really well-known Silicon Valley investors were saying it was impossible, not even within the realm of possibility to create $1 billion company, not from a valuation point of view, but from a revenue point of view in Canada, let alone in Ottawa. And as we know, Shopify got to $1 billion in revenue faster than any company before or since on the planet. So proving all those credits wrong. But just curious your thoughts on, are we seeing the proof points start to be more material now of that kind of success that Shopify's had?
Yeah, and so one of the advantages, by the way, of something like Shopify is even at a small or mid-size, they can start being one of the marquee companies of an ecosystem and really get and attract more talent. And so much earlier in the journey of a startup, you can be kind of the go-to place to work. And I think that's powerful. One of the things that I've seen is in many ecosystems, they tend to take off as there are a couple of these anchor tenants. And so having one really starts unlocking it. But actually, once you get the second, that gets a little bit better. And over time, there's kind of this inflection point, usually at about 5, where it really takes off. And I think there's a couple of reasons for that. I think one is there starts to be this network of folks that might have made a little bit of money and that are becoming angel investors, but are also trained in building startups and are hungry to build their own. And so you get a little bit of this mafia going that starts the flywheel, and that becomes really powerful. So we're starting to see that in Ottawa. I think we're seeing that in a bunch of other ecosystems around the world. That is obviously not germane or unique to just emerging ecosystems. The same thing unlocked Silicon Valley back in the day.
One of the things that I was interested in your thoughts. I wrote a blog post, I think, about sort of how Boston was displaced by Silicon Valley in the early 90s. And a lot of people think the Silicon Valley has been here forever, will always be here forever. We're seeing some really interesting dislocation. And you talk about it in the book, the cost of rent, the cost of engineering talent, how many people in the Valley would like to leave. There's a dislocation moment that seems to be happening. And by contrast, these frontier innovators seem to, I love your quote from Chris Gladwin of CleverSafe, that the median tenure at his company was 10 years, whereas in the Valley companies, you're seeing churn rates in core responsibilities of almost 20%. And how do you even keep a company going and executing when you have that much churn in the business? So these frontier innovators, even though on one hand they have deficits on talent in terms of experienced talent, to your point on Shopify, they can grow it, and the retention seems to be better. Is that what you were seeing as well?
So it's interesting. In the Valley, I think churn is acceptable. In some ways, it's built into the business model. There's such a deep talent pool that it's okay to have this philosophy of I'm only going to hire A players, because when they churn, I'll find someone else that can slot into that role, and therefore it's okay. And a lot of high-flying tech companies have high churn, and it still works. I think as this is a situation where constraint becomes an advantage, and you actually take this attitude of actually I need to build an A team, not just an A player. And so Chris Gladwin is a good example. Shopify has had very low churn throughout the journey, and part of it is actually they've taken this growth mindset. Part of it is employees are really committed and the stock performance done really well. And I think part of it is just kind of how the ecosystem is viewing it. And I think this attitude difference is really powerful and an advantage in many ways. And so I definitely see it. And I think it ends up translating for some companies as a incredible advantage as the brain trust stays for much longer.
So the other side of it, another quote from the book you had from Amanda Leonard, the CEO of Jellyvision.
Yeah.
She was saying that it was a little bit challenging recruiting into those ecosystems because if the company or the startup didn't work, where would that executive or that engineer go next? Not as many options. Is that still the case or declining, or what's your point of view on that?
I interviewed Josh Samer from Skip the Dishes, and he told me, he's like, look, Winnipeg is one of the hardest places to recruit to and recruit from. And what he meant by that was, look, he became the biggest tech employer in Winnipeg, and he had a talent pipeline challenge. But also, Winnipeg is growing up, and a lot of Winnipeggers in the audience will know, like, coldest place on the planet, many times a year, colder than the surface of Mars a couple of times. So winters can be tough.
I know the YC guys talk about startups being like mosquitoes, but in Winnipeg, the mosquitoes are as big as horses.
Yeah, exactly. But in their case, look, like, I think Amanda's point was right on, right? Like, if you're the only anchor tenant in a location, it's high risk to get people come to you, right? If there isn't two or three things. But also, Josh, in his particular situation, this is an advantage of the Canadian ecosystem in some ways, is he used their structural advantage, working within Canada that had a friendly entrepreneur visa, to get engineers in the country. And he was able to actually use many of the structural things around Canada as a particular advantage.
Yeah, that's been startling of late. I think the immigration policy in the U.S. around H-1Bs, et cetera, the data that came out of Toronto last year was startling. Like, total U.S. tech hiring in 2019 was around 25,000, and in Toronto alone was 27,000. Clearly, that wasn't just engineers in Canada coming. That was, to your point on the book, is being able to really access a global talent pool, and make it easy for that talent pool to come and reside in a global city. Yeah,
and one of the trends that I think is really interesting, and by the way, it's like totally du jour in the Valley. I see my Twitter is blowing up with people sending me their remote setups at home. But one of the tools that I think entrepreneurs operating in ecosystems outside the Valley have had to think about and orchestrate is actually how to build distributed teams. If you're operating an ecosystem that you're lacking certain, let's say a CMO that has taken a company through IPO and managed SDO or whatever, and there aren't 5 of them in your ecosystem and one of them is not available, like, you have to look beyond your ecosystem. And so entrepreneurs have figured out how to build distributed teams as a way to tap talent from wherever it resides. And obviously there's a whole spectrum of what that looks like.
It was one of the chapters in the book that I thought was awesome. Just saying that out loud. And I think, with COVID and a lot of people having to work remote, some really great lessons learned from companies like Automatic, Basecamp, Envision App, Zapier, HashiCorp, and Skylight. But curious your thoughts. I mean, you had a Mary Meeker quote that was a little bit older, where, in the space of 20 years, we've doubled the number of remote workers in America to 5%. But, now what we're all going through, how do you think this?
We've done more than double it last 2 weeks.
We have. And I'm just kind of curious as to, how do you think this transposes two things? One, people's capacity to remote work. And do you think that accelerates frontier innovators' ability to get talent and work in that way?
So I don't think remote work will be the normal. I think it'll be more normal over time. But so not every job can be done totally remote. And in venture, I think we can do a bunch of meetings remote, but I think it's also really important to spend time face-to-face and get to know entrepreneurs. So I think we're going to see a hybrid, but we're definitely going to see a shift towards it. What I do believe is that with this shift that we're going through right now with Corona, I think we're understanding, one, how much can be done in the remote context. Two, I think every culture is learning best practice on how to run an organization in a remote way. I think, if you're a startup that works on remote, the cultural challenges in your organization become obvious so much faster than if you're in person. And so you actually are forced to be reactive. You mentioned Jasper and Skylight. He told me he thought as a remote company, he was actually more integrated because they could have very intentional conversations. He's got a screen at his office with essentially a live Zoom with everyone. He can kind of double click and have one-on-one channels with everyone. And so a lot of companies are replicating this. And it's no surprise to me that, some of the leaders on remote, you mentioned Basecamp or Zapier, they're getting built outside the Valley because they've had to do it in Chicago and Missouri respectively. And I think everyone is going to be looking to those companies for best practice and for advice.
Yeah, it was really my favorite chapter of the book, and I think so timely right now for all of us. And I think as we talked about, one of our our current portfolio companies, SignalWire, is based out of Madison, Wisconsin, but is fully distributed and fully remote. And their tool set, they live on it every day, and I think they're more intimate and move faster. And seemingly with less friction than I see with companies that are, in the sort of Steve Jobs, everyone's got to be locked into the spaceship.
Yeah, totally. And one of the last investments I made was in distributed teams as a service company that actually close to both our hearts in the sense it's called Terminal, and they help
great company
to Canada and actually now Mexico as well. And I think we're going to see a lot more of this where firms are not just part of the value proposition is get to tap distributed talent. Part of the value proposition is you're able to potentially tap lower cost pools. But I think one of the pieces that's underappreciated that we're going to appreciate today is you can actually build a more resilient team by having teams in a bunch of different locations. And if there's a problem in one location, you've got the rest of the network that can be built around it. And I think that's one of the advantages of fully remote as well.
One of the things I wanted to pick up on was sort of related to that is this idea of pollinators that you talked about in the book, and how the founders that really come from the frontier typically have more experience, typically have more degrees, typically have lived in multiple cities, multiple countries. What's this idea of pollinators, and how is that different than sort of like the engineers bouncing from one company to another in the Valley?
Yeah. I think in the Valley, we have the stereotype of the 22-year-old hoodied warrior going to take down an industry. And I think the frontier is a really interesting opportunity for us as well in the Valley to look in the mirror. But the data in the frontier is that entrepreneurs tend to have more degrees, have worked across more industries and functions, and have lived across a bunch of different industries. And as such, are able to tap a network of ideas and of talent. And it used to be that entrepreneurial ideas, you think of like eBay or like Web 1.0, the idea starts in the Valley and then gets copycatted in Europe or in Canada or wherever. I think what we're seeing these days is actually an innovation supply chain that is more global. And so take the example of Uber and Lyft, that started in the Valley. It was replicated all over the world. Today, China has Didi, which by size dwarfs Uber by many multiples. In other countries, Uber was copied to be Gojek, but Gojek instead, Nadeem, the CEO, talks about his vision for it. And so instead of cars, it's Ojeks, little motorcycles. But his vision is in the morning, people get driven to work. At lunch, he delivers food. In the evening, he drives people home. At dinner, he offers food. In the day, it's e-commerce, it's mobile banking, it's a bunch of other services.
Yeah.
That's influenced us here in the Valley as well. And now it's no surprise, Uber has Uber Eats, has the Uber credit card, et cetera. And so I think cross-pollinators are able to tap what are the lessons that are happening in Chicago and Toronto and Amsterdam and understand that, because I think the nature of innovation will no longer be unidirectional. It'll actually be about tapping these horizontal networks of ideas and really understanding what's happening at the same time as adapting it and localizing it by really understanding your actual particular context.
So going back to the earlier part of the conversation, we're saying, okay, if there are three things ultimately that creates viable companies, so there's access to capital and intelligent capital, there's access to information and infrastructure. But if ultimately this idea of the world is flat in terms of getting access to information and markets and having that flow, as you say, and learning from each other, how's venture capital changing to serve frontier innovators? What do you think needs to happen there?
Yeah, and I think in some ways, a lot of the changes on entrepreneurship have happened, and I think venture is still lagging this. And we're going to see, I believe, more and more changes over time. A couple of changes that are exciting to me are, one, I think we're seeing, instead of local firms, we're seeing global firms. So instead of this, hey, look, I need to work in the Valley, go to my board meeting, come home for dinner. Like we're seeing entrepreneurs getting
the proverbial, I won't invest in any company I can't bite to.
Yeah, exactly. I think we're seeing that. And I think Zoom, by the way, is an incredible leveler for that. And now there's same cost of meeting an entrepreneur in San Francisco as there is in Toronto for me for the first meeting. But I think one is that. I think two is, venture, our current model, got its inspiration from the whaling industry. That's why we call it, literally, that's why it's carried interest. It was what you carry off the boat. I think we're seeing some experiments in other models. The mining industry is interesting, and people are experimenting with revenue shares. And Clearbank, a Canadian company, is at the forefront of that.
Great founders too. Great team.
Yeah, and I think we're seeing experiments on decision making with computerized decision making. We're seeing new players like corporates. One of the things I think is pretty interesting is how you guys are building the ecosystem approach. And in some ways, it's a cross-pollinator's model as a service. But I think we're seeing a bunch of those that are coming together.
Yeah, it was really fascinating. If you take both the art and the science and the math part of it, and you bring it together and say, if you had a clean piece of paper, how would you build a new venture firm to serve these frontier innovators? And one of the things that was interesting in the book was you talk about how the Valley's not only structurally old, but if you look at the people making the decisions, whether or not their ethnicity or their gender, just not reflective of where great innovators are coming from. And one of the things that was an unintended but awesome consequence of our model using capital efficiency of growth that drove us to find founders that were using great product market fit to grow their businesses. Yeah. In part because they had capital deficits is, almost 40% of our founders are women, not because we decided to go do that, but because they've just built phenomenal companies where the markets are really driving them and pulling them. And those are the kind of things I'm excited to see. To your point on the gurus, our view is that on the terms of global infrastructure and capital, the world is effectively flat. Obviously some geographies like Africa, where you've got to build full stack, but by and large, we're getting closer and closer to full equivalency globally. And the big deficit and the big difference is, access to people who have done that and been there and getting those answers to those questions. So if you're Bob Meese, one of our gurus who's running Duolingo in Pittsburgh, he's taken that company from 0 to 100 million in revenue in 36 months, using zero paid acquisition. His challenge is who is he going to talk to in Pittsburgh about going from 100 million to 500 million. Yeah. And so flattening that access, is a big thing that we've done with Breakaway Growth.
And also something you've done with C100 too. In terms of helping Canadian companies.
Well, that was really the first version, if you will, which was built on the shoulders of Thai, which is a phenomenal organization from the Indian expats. So I do think, and Thai and CICC, which is the Israeli organization, a lot of these global communities, the foundations people don't realize have been being built for almost 20 years. C100 is 10 years old now. Thai is now 20 years old. And so with that foundation, things are happening faster, information's coming together faster to allow these frontier innovators to really stand par to par with any Silicon Valley startup, and in many cases like Shopify or Atlassian, beat them.
Yeah. And I think this notion of being able to be set up to be global is one of the things that I think that's Shopify part. One of my favorite case studies on that, as well as UiPath in Romania.
Yeah, right? That's a great part of the book.
And they're able to scale globally, and I think in some ways, I think they're one of the fastest enterprise companies growth of all times. And we're seeing them out-innovate some of the Silicon Valley companies, particularly in their ability to scale outside of Europe and across borders. And so,
and I love the quote you had in the book about because they'd come from a small country by definition, their markets had to be outside Romania, and so they thought about the company from that context right from the get-go.
Yeah, and it ends up being that ends up being a pretty good example of one of the themes in the book, which is, look, in this context of constraints and in a context of less, you can actually build with an advantage. And so with having a smaller TAM, you're actually forced to think about regionalization and internationalization from the get-go. And that then infuses your product, your organization, your culture, your choice of investors, et cetera, to set you up for the future. And that, I think, then turns this into the snowball that I think contributed to companies like UiPath and many others that have been successfully born global.
Well, Alex, thank you again for taking the time. The book is absolutely fantastic, resonated really strongly with us. Thank you for putting it together, and thanks for taking the time to do the Resiliency series with us at Breakaway Growth before the launch. And good luck with the launch on the 7th, buddy. It's a great read. Highly recommend it.
Thank you so much, Chris, for having me. This has been a lot of fun, and looking forward to finding some great companies together.
Awesome, buddy. Take care.